Greetings, members, one and all of the Salivation Nation. Gold and silver prices plunge. Inflation continues to rise. And here is why. Let's explore. The two things seem diametrically opposed to each other. Rising inflation by every single day. Gas prices continue to go up. Goods and services continue to climb. I did some community posts about what happened earlier today with the plunging gold and silver prices, plunging markets, plunging cryptocurrencies. Everything is plunging except for inflation. And so there's a reason for it. And we're going to talk a little bit about that in this video. And stay tuned for more of it, by the way. In other words, we may still continue to see the market fall, and we may continue to see gold and silver fall as well. Usually when the stock market goes down, precious metals go up. And there's a couple of reasons why that's not occurring today. In fact, before we get started, let's take a look at the markets here. As I remind you that I do post videos every single day. I hope you'll come by and see my take on the markets and talking about precious metals in various different ways and forms. So gold was down over 2.75%, 2.75% drop today, down $51.70 as we get close to the market closing. Silver is down almost 3.75%. Massive drop for silver, down 82 cents, $21.19. Platinum took a big hit too, well under $1,000 now, to $941, down $41, a 4%, 4.22% drop. Palladium took the biggest hit, down $142. We're getting closer now. In fact, if you look at the bid price, gold is now worth more than palladium in the bid price. Pretty crazy. And but nonetheless, there's where we are at with palladium. Rhodium also took a pretty big hit as well too. It's cut in half from its all-time high, by the way, now, more than half. Gold to silver ratio is climbing now, up over 86. Man, crazy. That's where we are at though now. Let's take a look at an article here from Reuters, which actually sheds some light as to what's going on here with the markets and why gold and silver fell with inflation continuing to rise daily. Gold slides over 2%, palladium sheds 7% as the dollar stands tall. There's your answer. That's one of the answers here. Gold and palladium suffered sharp declines on Monday as the dollar rallied on bets for steep interest rate hikes by the U.S. Federal Reserve, eroding appeal for bullion and other precious metals. Spot fell 2.2% to $1,829.08 per ounce by 145, and gold futures were also down. The dollar index hit a multi-decade peak, supported by fears of global economic slowdown and bets on steep interest rate hikes by the U.S. Fed to become the preferred safe haven at the expense of gold. And that's just it, folks. Typically what happens, at least in the short term, is the Fed raises rates, and that does put some pressure on gold and silver. And we've seen this before. This has happened before. But this is just in the short term. If we get into a recession, especially if the Fed raises rates by 0.75 of a basis point and it doesn't have any effect on inflation, the only thing that will be recession. And many people are thinking now, after what happened on Friday with the inflation numbers, and this is just a reaction to it here, although a little bit delayed, is that they're going to do that, and that's going to strengthen the dollar, but it also will lead to recession. And then we'll see gold and silver start to come around. But it still may take a while. We have to be patient through this. A stronger dollar hurts gold as it makes the metal expensive for overseas buyers, while higher interest rates further dent its appeal as they tend to lift Treasury yields, raising the opportunity costs of holding bullion. There's no safety trade anywhere, so gold will be liquidated. There's a massive correction going on, and when volatility gets that high, you can't find safety or comfort anywhere, said Philip Schreibel, chief market strategist at Blue Line Futures in Chicago. Hotter than expected U.S. CPI data on Friday led to traders now betting on a total of 175 basis points in rate hikes by September. That's 1.75 points. Some seeing a chance for a 75 basis points move this week. Gold hit a 1-month trough of $1,824.63 post the inflation data, but rebounded strongly as economic concerns took center stage. That volatility has extended into Monday, with bullion beating a sharp retreat from a 1-month high hit during the Asian session. The quick unwinding in gold highlights the current tug-of-war between its pricing drivers, with firm inflation being countered by bets of aggressive policy response, as J.P. Morgan said in a note. A bullish gold outlook would require more signs that economic growth is cracking under the strain of higher inflation. And that's coming, folks. I think all bets are off in terms of where we go. I think after they do raise rates, if they raise it 0.75 of a point, I think we'll see the prices go down. But again, that's just for now. I think once we get confirmed recession and another set of rate hikes, and inflation continues to run hot, and employment starts to pull back a bit, housing starts to pull back, once those realities start to set in, then I think we're going to see gold and silver react. What that reaction will be, well, it's kind of anybody's guess, but it will definitely be to the positive side in terms of price movement. But we will see. There's another article here that the Jim Wyckoff has over here on Kitco that talks about this. Steep rise in Treasury yields, another aspect, another reason why the prices of gold and silver are down. Gold and silver prices are solidly lower in midday U.S. trading Monday, pressured by U.S. dollar index that is solidly higher and trading near a 20-year high, and by sharply rising U.S. Treasury yields that are at multi-year highs. Gold prices did hit a 5-week high overnight, but those gains could not be held. Global stock markets were mostly lower overnight. U.S. stock indexes were sharply lower at midday, and so that's just it. And we've got these things that are weighing in on it. The Russia-Ukraine war and its economic implications. Problematic price inflation weighing heavily on trader and investor sentiment to start the trading week. And then COVID lockdowns in China. Some say that they are pulling back and they're starting to reopen things again. Others say that there's still some pretty crazy lockdowns happening there. That's going to affect the supply chains. I think this is another reason why it bolsters the case for manufacturing in country and not outsourcing a lot of this stuff to other nations. Of course, there's multiple reasons why we should do that, but nonetheless, we'll see. It'll be very interesting to see. Let me know what your thoughts are in the comments section below about a rate hike. Do you think it's going to be 50 basis points or 75 basis points, 3/4 point rate hike or a half point rate hike? I think it's going to be 3/4 point rate hike. It'd be very interesting to see, but gold and silver are certainly reacting to the downside. Now, here's, I think, one of the biggest reasons why. This is the paper price for gold and silver. These are the futures and everything that's tied to them, the ETFs. The derivative markets are driving the price of gold and silver. We know that there's a lot more of the paper than there is of physical. The physical price is still high, hence why the premiums are high for multiple different factors. We've talked about that before. Regardless, the people that buy the paper metals typically don't hold the physical. You do have some overlap. There are certainly some who do, but regardless, most that do, they don't have any exposure to the actual physical metal. So they really don't know much about it or care much about it. They just understand, hey, it's a diversity tool. So we're going to put that there. So when they get out of it, because they want to run to the safety of cash, which is what happened in March of 2020, we're seeing somewhat of a mini version of that now, I believe. We're seeing a mini version of what happened in 2020 when people ran to the safety of cash. That's another reason why the dollar is stronger. Stronger dollar is going to weigh on the precious metals. And I believe that's exactly what we're seeing right at this point. So it'll be very fascinating to see how this all plays out in the coming week here, especially after the Fed makes its announcement. And I'm not going to even begin to predict, although if I was a betting man, I would say that the metals will probably fall even further, but who knows at this point. But these are the times we live in, and this is what's happening. It doesn't make sense, and it's, we would think the metals would rise because they are the ultimate hedge. But nonetheless, apparently that's not what's happening right now. So we'll see how it plays out. Let me know what your thoughts are in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.